Welcome to Insights. I'm Eric. I want to introduce you to the visual side of price and time cycles. It's easy to get lost in the numbers of the matrix, and sometimes, while it's not always necessary to repeat this exercise for every market, when you see the boxes, it's easier to visualize the price and time cycles so we can accept what the matrix is telling us. The green boxes represent up impulses or bullish impulses. So the price cycle would be defined as the trough to peak, or this distance from here to here. And the time cycle would be the length of the green box. So the computer considers one continuous box a standard cycle. But the reality is that the cycle is somewhere in between these box fragments, because it can't filter out everything, but what you're looking for is a continuous up movement with some breakpoints, because the daily is volatile, so you're going to have a reset within them. But in reality, it's kind of a box that the computer can't see. It's difficult to program that, but you'll have to visualize it in your mind. I've created the green arrow to represent kind of link the two green boxes together to represent one full impulse. So when you get an upward move in 2016 and 17, ultimate to the high in 2017, and we copy this over, we can see that the upward movements of these cycles in terms of both peak to trough or trough to peak, and in terms of the length or the width of the box, is relatively uniform. We can also move it over here in 2018 and 19, and we see it follows a similar cycle. These cycles are repeatable. They're consistent from one time period to the next. And when you have an upward focus move, let's pull one more arrow over. Now you can see why the current move is getting vulnerable. Now we've talked about 3 to 5 standard deviations, but it's really the height of the arrow and the width of the box. The width of the box can get a little bit wider, but eventually it's going to become vulnerable because all of these impulses have to go through resets. This last one had to go through a few resets before it finished this entire move. This one really didn't have any resets, so we enjoyed the full, it was an easy trade. This one, because it jumped the creek over here, you might have another reset and sideways move before we pull out and create either another arrow or something else happens. So this is the daily look at the cycles on the daily. Let's examine the weekly, and you will see that these cycles are fairly repeatable. And it's the repetition within the different time frames that helps you give confidence in terms of where the cycles are going to take us and how vulnerable a particular move is. Again, this repeats similar time frames. We have an up move and an up move and potentially a new up move here. We use this arrow to represent the trough to the peak, and we copy it over, and we can kind of see that they follow similar patterns. And if we copy this one over here, either to this point or to this point right here, you can see on a weekly basis the Bitcoins move from not only trough to peak, as well as the width of the green boxes are not comparable to the past ones, so it's not as vulnerable on a weekly time frame or a weekly within the weekly cycles. And then there's one more look. It's the primary trend, and we'll get to that one in a moment here. And as it pulls up, we're going to say do the same type of exercise. We're going to create these arrows within the moves. Now what you'll see in the primary trend is there's less noise, there's less breaks. These are up moves, then there's down, then there's up moves, and then there's down, and there's up. And if you create one arrow for this move and you pull it forward here, you can see that they match fairly well in terms of both trough to peak, and as well as the width of the box. So whether you place this arrow here or you here and establish, I would probably place it right at this box. We are going to, on a monthly basis, or the primary trend, we have higher to go, and this box has to go, it would be allowed to go wider before it would become vulnerable. So visually, this is what the evolution of the trade, the play off within the price and time cycles looks like when we were reading the numbers off the matrix. It's easy to get confused by those numbers, but this is an exercise that works in Bitcoin as well as every other market in the matrix. That's why we jump on the primary trends as early as possible. Perhaps the start of the primary trend for Bitcoin was right here. Even though there was a slight correction and a slight flip, it flipped back up. This could be considered one continuous box. Or maybe this is the start of the primary trend. I would have to think that the start came back over in here, and we're headed up into this area with a box that'll be roughly from this distance to this distance. And if that happens, you'll make a lot of money in Bitcoin, but most people will be extremely bullish up here and will be reluctant to sell. And the computer will be giving us a completely different message. It'll be advising us to sell. It'll be telling us that the primary trend is old. And we'll be talking about doing the opposite of what everyone else is doing, standing away from the crowd. So thanks for watching this review on Bitcoin, the visual view of how the three time frames work with one another in terms of both price and time cycles, and I hope this helps out. If you have any questions on any of this stuff, contact us directly at the blog or lay some comments through the video channel underneath, or subscribe and so that you can keep on following us. So thanks for watching and have a good day.